Let's look at the US dollar versus the Swedish Krona. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So, we go here to the Forex market. US dollar, Swedish Krona. So the US dollar is the base in this case. Ominous 6.66% from the low, minus 5.46 from the 52-week highs. And so we have certainly seen some meaningful moves, given that this is the Forex market, and you can get very big moves due to the leverage. And the interesting thing is that I did find these very major time cycles and also the small time cycles within. The small time cycles have been especially relevant recently, a very nice cyclical rhythm. But we also have these gargantuan time cycles that extend over decades. So yeah, big things are happening in the Forex market. So let's remove the super giga time cycle and zoom in a bit. So we have seen that recently the small time cycle here has been pretty darn good at calling price action, suggesting that we do have a rising phase here extending into the late part of 2022. So this is very long-term giga picture patterns. And you can also see here how time cycles can form major technical patterns, like these three time cycles could end up forming a head and shoulders pattern. That is a potential development that we have to be aware of. You could even argue that in the giga picture maybe we have a monster head and shoulders also developing. But the Forex market is obviously very impacted by fiscal monetary policies, and it is essentially a zero-sum game. So even though if we were to see the US dollar strengthen now due to this small time cycle, that is of course relative to the strength of the Swedish Krona. In the ultimate sense, we see that currencies across the globe are just they are just printed out of thin air. It is purely digital. It is not backed, by gold or anything real. So that is just something to be very much aware of. It is very much a social construct in the ultimate sense of that term. But yeah, the time cycle here suggests a bullish development. If we quickly now look a bit at the seasonality. So this is the last 5 years. We tend to see the strength here for the US dollar in August, September, to some extent also October. Over the last 10 years, we do see strengthening, peaking here in October. Looking at the last 20 years, August is one of the stronger months, but we are only talking about, the US dollar closing higher, 55% of the time. September, October. So October here is one of the stronger months. So basically we do have the seasonality, corroborating what we see here also with the time cycle to some extent. So that is definitively interesting and strengthens the idea that we could see appreciation here for the US dollar. Looking here at the PPO and the RSI, it has been significantly higher in the past. So basically there's more fuel left. Something to take note of here is the symmetry here in price action. You can see that if we highlight it in color, so this price action here is very similar to what we saw here, which means that there's a potentiality that something like this move will be mirrored, over here. So the symmetry is interesting because if we look further back as well, we do see that there is a tendency for symmetry here in this pair. You see that you have this rally, then you have a sell-off. So even though, of course, perfect symmetry would be very that wouldn't make sense, because behind the chart, of course, there's real politics, real economics that is very dynamic and changes. But these instances where we do see this odd symmetry, it could be that there are these that the chart is reflecting something profound happening in the real world. This is one of the reasons why there's a lot of people who are fascinated by Fibonacci numbers and stuff like that. I do think that Fibonacci numbers are interesting, but I think that one of the issues with using Fibonacci's on charts is that different people can draw different fib levels. And as such, different analysts are not looking at the same thing, and that reduces the reliability. But my point being is that, you know, there's a lot of things happening in the math behind the chart, and that impacts, you know, the future formation of the chart. Yeah. So here are the daily data points. We see here, you know, that if this is part of, you know, well, we do have the rising phase and the bullish seasonality. So there could be significant, well, some meaningful gains here to the upside. I think that the level that could become an issue is definitively this level here, because that would mark, you know, the high here from this left shoulder. Also, this zone here is also a zone of resistance. Yeah. Looking here at the RSI and PPO, we have been significantly higher during previous rallies, so there should be more fuel left here for the bulls. So taking all the evidence together, I think it is easier to make a bullish case than a bearish case. We have some very interesting technical patterns. In the very big picture, though, we could very well be in the process of forming a major head and shoulders pattern, due to the time cycles. But that is much more longer term. To gain access to all the research, you just go here. Then you can download the entire Excel watch list that you see in the videos. You get the top picks of the week, and you also get investing courses and seminars. So there's some very substantial value here for only $19 a month. So whatever you do, of course, you want to let this trend be your friend and be as market neutral as possible.